Hi everyone, I am Adam Harris and this is Sunday night and I'm doing my market analysis, and I was trying something different today. I was looking at the kind of oil energy calendar and the metals calendar separately, and I forgot to actually include the energy calendar in the second video. So I'm going to do it now. I'm just going to cover it now. This is with regards to the crude oils as well. And so just one of the things I want to be aware of coming up this Wednesday, 3:30 p.m. UK time, is so that'll be in the afternoon. It'll be first thing in the morning in the US, and looking to see if there's any impact on that, as well as the OPEC meetings all day. So just wanted to allude to the fact that this coming Wednesday, I would expect most of the day there to be potentially volatile with regards to oils. That being said, let's jump across to the charts and have a look at the global indices to have a look at and see how the market is looking this week, and I'll talk you through my trading plan there. So kicking off here, looking at the Dow. So actually what I should be doing is using the NASDAQ, because we're predominantly a technological society today versus an industrial-based society 100 years ago. The NASDAQ is potentially a better windsock with regards to kind of what the week is looking like. So just to recap, when I look at the monthly, of course, it's overvalued. It does need to come back down and take a bit of a breather, head down towards below 11,000, probably closer towards 10,000 is a really nice, decent, healthy retracement. The weekly does not look that bad. The weekly is not that overextended. Last week's candle, nice and bearish. If we just have a close-up look at that, nice and bearish, which could be a potential turning point. So it is a possibility. It's not outside the realm of possibility that price could come back down to 12,000 this coming week, or potentially below that this week if there's any kind of a shock to the system or unexpected stuff. But otherwise, when I look at it on a daily basis, there's no divergence. So let me just kind of clarify that. We have got fresh highs in price, and if I look at the MACD, both the MACD and the RSI actually show the momentum to the upside. The momentum is more bullish than bearish. Looking at Thursday's bullish candle and Friday's indecision, red but bullish inside instead of indecision, I mean say inside candle, I would say that a break above this Monday or Tuesday this week. If we do break above the high, I can see price is going to attempt to get over 12,500 and try to do the next leg up on the daily. If it does happen to break below that and close below that before it breaks the high, then I would expect the market to potentially kick off and follow through with that weekly retracement down towards 12,000. Going and comparing this to the Dow is definitely struggling in this area. If I kind of go ahead and just mark this at this point here on the daily and just kind of mark out that area, you can kind of see running it up to 30,100. The market is struggling to get beyond that point. That's not really a great thing. The MACD looks a little bit bearish, kind of comparing a chair. It's starting to break a little bit lower. RSI is a little bit flat. And so really it's not giving a very clear signal here the price is going to fail, for example. It doesn't look that overextended on the weekly, but at the same time, and it's had a nice retracement on the monthly and pushing up higher now. The problem with this is that there is a mixed signal here. The market is actually quite capable of continuing on, but at the same time, it seems to be struggling to find buyers above this level, above 30,100. Not enough to actually keep the momentum going and to take it higher. So I'm cautious with that. So again, I'll be looking for breaks of these previous swing lows if the market's going to head back down to recent monthly support resistance levels, significant levels, and I'll be watching the NASDAQ for that as well. So the NASDAQ will be the leader in this particular case. Looking at the S&P, it's in an uptrend, it's looking bullish, it's an uptrend on every single time frame. So principally we're in a nice bullish bull market. It is looking nice and bullish, slightly kind of bullish candle for Friday. And a break above the high before break of the low implies the market is going to take another run at 3,700. So there is a possibility here the markets are going to break higher. If that's the case, I've got a puppy that is quite talkative at the moment. So the market's going to attempt to break higher. It could immediately run into resistance at the most recent highs. So I'm exercising more caution this week because, again, we are overdue for a decent correction on the higher time frames. So it doesn't mean that I don't necessarily trade it at all, but it does mean that I'm make sure I've got a stop loss in, making sure I'm taking profits sooner rather than later, maybe a trailing stop, partial profits, not necessarily complete profits, but also watching these key levels, because at this point, all trading, in my opinion, is kind of high risk. We are due for a correction. Looking at Russell 2000, really, really nice. In fact, I would argue but I think it's undoubtable that, and kind of hard to dispute this, that over the last few weeks this has been the best performer out of the US indices. It's just cracked on. It looks really beautiful, and again starting to run out a bit of steam here. A bit of a pullback into the moving averages would be acceptable. That weekly, I would say, would do very well with a nice correction down towards 1700 or even down towards 1600. That monthly is now starting to push its luck. We're back into a higher risk, but it might be wanting to hit 2000. Spoke about this last week. We're not necessarily that far away, so push on is potentially on the table, but at the same time, as I said, it's now overextended, and therefore I consider everything high risk. But there was a really nice potential swing trade there, and it has succeeded. So there could be some pullbacks into the previous highs, back into support around 1850, producing a bullish candle this week that could potentially head on higher. So let's head away from the US. Let's see what's going on in the UK. So the UK, I'm very happy to say, is now in a monthly uptrend. That's significant. It broke back up above 6,300. That I see as an overall positive sign. Then having a look at the weekly. The weekly is, had a bit of a nice bullish candle the week before last, indecision candle last week at a weekly resistance level at 6,550. And so actually it could end up falling back, but I think with a really nice breakthrough here, overall, I kind of want to see this continue on upwards. See it pull back down and test support at 6,400. Would be great in this area, produce a bullish candle, and then take another run at 6,550 and break past that. That would be ideal this week to see it happen by Friday. We'll have to play it out, see how it is by Wednesday, what's unfolding. Then moving across to Germany, having a look at the DAX. DAX has really been struggling. Okay, so here it's more bearish than bullish. If it fails to continue up and falls through 13,000, then it's reasonable to me to see it continue to hit a little bit low. It's really struggling on a monthly basis with that key level of resistance, and really struggling to get past that. I do think that if the rest of the markets or the previous markets that I've had a look at have managed to be bullish, I think it'll find the strength and then follow through on that. But also very, very cautious on this. And if it did end up breaking low and heading down towards 12,000 this week, and some of the other markets retraced, or some of the other markets had a bit of a correction, then that would be a sign. Especially, it's unlikely that I think one of them would have a massive correction while the rest didn't. So I think they're likely to do it as a group. Excuse me. The French CAC as well produced, and now a confirmed swing high on the weekly at a monthly support resistance level. That's a nice swing high. Usually, if this was a currency, for example, or a commodity, I would just say, okay, it's going to come down to 5,200, back down to 5,000, and that's end of story. However, also confirmed uptrend on the monthly, and this is a significant resistance level, similar to the DAX. So both the French CAC and the DAX are now basically battling it out at significant monthly or all-time kind of significant levels, highs, previous all-time highs. And so I'd like to see, same thing there, this could actually have a deeper correction, pull down, so that is a possibility, but I'd also like to see it creep over. I'm just saying they're now at a crucial point where if they fail to do this now, they're going to have to end up taking a bit of a breather and coming back down. Looking at the Euro stocks, beautiful confirmed uptrend. I would plant its significant resistance at both 390 and 400. There's actually two levels very close to each other. But I'm very glad that last week it managed to break through this level of resistance, push higher, and it's now kind of taking a bit of a breather. So again, I think any pullbacks here could test this for support. So this is similar to the CAC and the DAX, where it could end up doing that. But at the same time, it's also very close to 400. I'd love to see it push on a little bit higher. Is there a possibility that these ones, if the US ones push higher, these could push higher? Yeah, there is. But at the same time, I'm also incredibly cautious here. For example, for intraday trading, I am much more drawn to the US sessions, maybe the FTSE, than I am to these ones, because they're very overextended on the daily. They definitely have produced swing highs on the weekly. And now the possibility, technically speaking, that the market could investigate lower is real. Nikkei, which has had a nice little breakout, performing quite well. Usually get a really large crowd volume candle. Starting to stall a little bit here. Again, this is in a similar position to the previous 3 or 4 charts. There could be a bit of a pullback there, and it's struggling now with resistance. They're just shy of 27,000. So again, I'm going to exercise some caution there as well. Finally, having a look at the S&P, the ASX in Australia. Solid rejection candle there. Almost a bit of a gravestone doji there, where, excuse my dog, and where it's struggling a bit to 6,700. Monthly looks really good. So all that's happening at this point is it is kind of running into these previous highs. But I would note, it kind of hit this level, pulled back, it almost kind of breached it and then pulled back again, and there's some bearish divergence on that. Okay, so the implication technically here is that further downside is a very real possibility. Certainly if we break these lows, then we're starting to see that. So aside from the US markets, a lot of the markets are looking like there's a real possibility they could investigate lower prices this week. So again, it just means I'm extra cautious. Would I potentially short in the markets? If I did, again, I still think at this point in time there's not enough evidence to indicate that we are heading out of our bull market anytime soon. The markets are still generally optimistic, and most of us most of us are becoming optimistic because we're heading into Christmas, and then we think 2021 it's going to be a new year. Treatment for coronavirus is around the corner, so potentially, although things look really dire now, the idea being that we can pick ourselves up and push on through 2021. So that's kind of the sort of anecdotal evidence to support that idea at the moment. But there could be some moves to the downside. If I was going to trade them to the downside, it would be really brief, small moves, lower time frames, making sure I exit my trades at these key levels, because there's always buy orders at these levels and there's always a sharp reaction at those points. Out of curiosity, let's have a look at Tesla and Apple, just out of curiosity. Okay, so Tesla performing incredibly well. That weekly looks, I'm kind of happy with that. It's starting to go a little bit parabolic. The daily is okay. It's okay, technically speaking. The monthly is really the big problem here, okay? I was already overextended here, already parabolic over here. It's just continued on up, and that's fine. I still consider that high risk, and at some point I know we're still going to have a correction, and I still put the true value of Tesla at about 300 at the moment. Let's have a look at Apple. And I'm going to be upgrading to, I guess, the new iPhone. My contract is up, and then I get a chance to upgrade, and so I'll be looking at the iPhone 12 soon. So I always like that. I'm not necessarily on Apple's Mac versus Windows or Mac versus PC. My setup here is always PC because most of my applications are PC based, and the performance and cost ratio makes the most sense. And iPhones, I just like the Macs. I'm just the Apple ones. I'm just there. So sorry, to wrap up here, Apple. So Apple's struggling a bit with 125. It has produced a swing low. It has confirmed that. It's struggling with 120 a bit. It's also definitely parabolic. No doubt its true value sits, I would say, on the low end around about 80, probably closer to 100. Any kind of pullbacks into that area would make sense as well. Be kind of scary for people on the daily, but otherwise it would look good. Again, what it's done here is it's broken through resistance, tested it, produced a bullish candle, and is indicating it's going to take another run up, but it's immediately going to encounter resistance at 125. So it's, there's some signs here where they are bumping their heads. They are a little bit overextended on the higher time frames, and kind of on an individual basis. Some of them might explore a little bit to the downside. Some of them might be able to push on a little bit higher. What we need is a bit of a breather. We need the markets to take 1 or 2 months to just have a nice correction, which on the lower time frames is going to be very scary, so it'll make the news. But actually, for the longer term, if you're thinking, quarterly, if you have a quarterly approach to stuff, it's going to be fine. It means that you might have one down quarter, but then you'll be back up for the next 6 quarters or something to the upside. So it's kind of worth it when you have a bigger picture approach to it. That's it. So some caution. As I said, I'm going to consider this higher risk than normal because of those potential outcomes, and then see how it goes, and then play it kind of on a daily basis by ear, as the expression goes. Have a good week, everyone.